Hey everyone, it is Jay Soloff from Investors Alley, and this is our options trade of the week. So I am at the unusual options volume table at Market Chameleon, marketchameleon.com, and I have sorted the unusual volume by quantity, so you can see some of the big names that traded a lot of volume. Tesla's at the top. The XLF, which is the financial select sector, so the financial sector for the S&P 500. This ETF traded over 600,000 times. That's about twice as much as normal. So this one's interesting. Traded about 80% puts. Generally speaking, when you see that that percentage in puts, it's usually bearish. It doesn't have to be, but that's normally the case. Although there are actually more call trades than put trades, so it looks like there were a lot of there was a lot of volume, probably in a few really big trades. So let's look at that and see if we can determine what may have been going on. So we'll go and we'll look at the actual trades and see if we can figure out. So we'll sort by quantity, and my guess is there'll be a couple really big trades that will be on the put side of the ledger. And sure enough, look at these, some massive put trades, 160,000, 106,000. This looks like rolling, maybe someone with a large put hedge closing out their July position and rolling it to August, maybe in the form of a put spread, perhaps buying the 22, selling the 19. A little bit hard to say from how this is divided up and priced, but it does look like it could be a rolling of a really big hedge, potentially. So looking down here, this one's interesting. Another trade from August here, August 21st. You see these three puts traded at the same time. 16,000 at the 21 strike, and then 8,000 each at the 19 and the 23. So this is a butterfly trade, which you'll see every now and then. But you don't often see butterflies this large traded all at once. My guess is that someone bought the 8,000s and sold the 16,000. So bought the 23, sold two of the 21s, and bought the 19. What this does is it lowers the cost of the butterfly. It was done at 23.11, so it looks like it's a somewhat of a directional butterfly where the trade makes the most money in August if XLF is at 21, but makes money within a range here roughly from about 19 to 23. The whole trade costs about 40 cents. So if you take 40 cents from each side, that's the range where this trade potentially makes money. So that's an interesting way of taking a sort of a bearish position on XLF without spending a lot of money. Let's take a look at XLF here. So if it's at closed around 23, this would be the point that this butterfly would be maximized, but it makes money pretty much anywhere from about 22.5 to about 19.5. So you have this range here by August, and it was done for only around 40 cents. So that's the most you can lose on it. That's an interesting way of taking a position, a bearish position. If you were just to buy the 23 puts, they would cost you about $1.15. You can see here is all that action from that day. A lot of big options trading here in big volume here in August. But this butterfly, so bought this strike, sold two of these, and then bought this one here. And so you have this sort of range that would be profitable. So interesting strategy. It's the sort of thing that I talk about pretty regularly in my Coffee and Condors chat room that we do twice a week. It's coffeeandcondors.com if you're interested in learning more about this sort of trading.